Hey everybody, what's up? How's it going? Welcome to week number 24 of the Dividend Investing Case Study. If you guys are new to the channel, this is a Dividend Investing Case Study where basically every single week I post an update on this channel and I show you guys how I built a Dividend Investing Case Study completely from scratch. Now we started this portfolio in the beginning of January and we're all the way to where we are today, week number 24 in the Dividend Investing Case Study. And if you guys want to follow along and you guys want to see the older videos in this series, be sure to check out the link in the playlist of this in the description of this video. I'll link to the whole entire playlist of the entire series. If you guys do enjoy this video, be sure to smash that like button and subscribe if you guys want to see more updates that I do with this dividend investing case study. Alright, so let's jump into my Wealthsimple trade account and let's see what my dividends, let's see how my stocks are doing, let's see how many dividends we got, and let's see how the dividend investing portfolio is doing for this week. Alright guys, so I'm inside my portfolio on Wealthsimple Trade here and Alright guys, so I'm inside my portfolio here with Wealthsimple Trade, and here is my portfolio I have. We have $2,414 is the max value of a portfolio for this week, and this is inside a tax-free savings account, of course, and we are up $147, which is 6% for the past month, but I do like to check the all-time rating here so we can see how our stocks are doing since we started the portfolio. At all-time, we are actually down 3%. So the funny thing about this is a couple days ago, the stock market had a nice little jump here, and you can see here right at the end here, we had a nice little dip here. If we go for the past week, we'll be able to see that we had a nice little drop here. So here's our spike up for the past couple days, and then the stock market dropped back down. And if you guys aren't familiar with investing and stuff like that, this is something that just normally happens. It's been happening a lot and through this portfolio and all the videos I've done. So it's completely normal. I'm not going to worry too much about it. We're still doing pretty good. The portfolio is still overall growing as long as we deposit more money, and it's doing quite well. Now, one thing I'm going to start doing different in this video that I didn't do in the other investing cases, I'm actually going to start going through my individual stocks, and I'm going to show you guys how they're going to be doing, or how they've been doing since we first started buying them. Because I know some people were mentioning, well, it's kind of important to see how the stocks have done since I bought them. So let's go through the individual stocks in this portfolio, and let's see how they're doing right now. Alright, so I'm inside my portfolio here once again, and here are the individual stocks inside this tax-free savings account. We're going to go through them one by one, and I'll show you guys how they've been doing since we bought them in our portfolio. So the first stock we have here is Bank of Nova Scotia. I talked about Bank of Nova Scotia before, I think about a week or two ago, and it's one of the Canadian bank stocks, and Canadian bank stocks have done pretty well, and I think they're pretty good investments. And it's currently valued at $58 Canadian, and since we bought it in our portfolio, this particular stock is sitting at plus 6.2%, which is $6.82. So we got a nice little return on that. And one thing you'll notice about all these stocks as we go through them is some of them are going to be up and some of them are going to be down, depending on when we bought them. A lot of the ones we bought a little bit later on or during the dip kind of thing, we're going to have a better return because we bought them at a cheaper price, right? So we bought them at a cheaper price for the past couple weeks, past couple months, and then those stocks kind of went back up. And some of the older stocks that we held in the portfolio long term are probably going to be at a bit of a negative. So a lot of these more recent stocks will be doing well, have a bit of more of a positive impact on our portfolio and bring it up, when some of our older stocks will kind of like down, because remember we had that big crash and whatnot, and they're still kind of recovering from there. So some of those older buys are not going to be doing as well, but over time as the stock market grows, I'm not too worried about it. It's going to grow over time and will do well, especially as our dividends keep rolling in. So next one we have here is Enbridge. Enbridge is a great utilities company in Canada. I did a video on Enbridge. If you guys want to check that out, I'll link to the description of this video. You guys can watch my Enbridge review video. But we're sitting at $41 Canadian, and we have a total return of $1.76, which is 2%. So that's not too bad. Enbridge is doing pretty good. Next up we have is PIF, which is Polaris Infrastructure Incorporated. We are sitting at a negative $13, so it's a negative 8%. So this one, I think I did buy this one before the dip. So this one is kind of like, I'm not surprised. It's going to take some time to recover, as a lot of the other ones that we bought, like pre-dip sort of thing. TransAlta Renewables is another one that I think I bought pre-dip. It's actually not doing too bad. It looks like we've recovered up to 0%. So that's not too bad. I'm pretty happy with that. But I remember this was one I bought a long time ago. And then next we have is SIF, which is, I think, Silveria Corp. This is one I recently bought not too long ago, and they did really good. They've been doing really well since everything. They've actually recovered quite a bit. They've actually recovered a lot from when the stock market crashed, and we're sitting at a negative $2 return, which is 5%. So they dipped down a little bit over the past couple days. They definitely dipped down a little bit, but I'm not too worried about it. We don't have any holdings about that. The next one we have is Shaw. Shaw we've had in this portfolio for quite a while now, and I might buy a few shares here and there. In fact, for this week, I'm probably going to be touching up some of my stocks that I'm just going to be buying some stocks that we have the least amount in this portfolio and just kind of touch it up and kind of balance things out a little bit here. But this is Shaw Communications. We bought this. This is like one of the first weeks on this portfolio. We bought this stock and we are negative 3%. So that's kind of expected, but not too bad. Like ever since the dip happened, since the entire pandemic, this stock to only be negative 3%, I actually don't mind that. I think that's not too bad. I'm okay with that. Next up we have is TD. Once again, another Canadian bank, really good stock. Once again, we bought this kind of recently, and you can see we're doing pretty good with this. We have a plus 8% here, which is $10 return, which is pretty good. But keep in mind, guys, a lot of these stocks I don't have a lot of shares in, so it's not a lot of money. Like 8% you would think would be really good, but it's only $9 return, so it really depends on how many shares you have, and a lot of these ones we don't have a lot of shares. So what I would like to do today is kind of buy some of the ones that we don't have as many shares in to just kind of bring up, some of the individual stocks in this portfolio. Next up we have is VDY. This is a high dividend yield index for Canadian stocks, I believe. Yep, with Vanguard. And this one is probably not going to be doing the best because we did buy this way back in the day and we do have 13 shares and we're down 4%. So you can see 4% here is actually $17. So because we own a lot more shares, it's a lot lesser, right? Like it makes a bigger difference whether it's up and down. So it's an important thing to point out. VYMI, which is an international high dividend yield ETF. We'll get kind of into the ETFs of the portfolio. We can see once again, because we bought this way back in the day and it's actually down negative 16%. So international isn't doing too well, at least that one. So this actually might be a good buy right now, actually, because it's down so much. It's actually might be one that might be worth buying is VYMI. Next up we have is XHD. This is an iShares US dividend equity hedge fund. We're sitting at, looks like negative 3%, which is $15. We do have a lot of shares in here, and negative 3% isn't too bad. It's doing pretty well. And then we have XRE, which is one of my favorite REITs from Canada, iShares REIT. We are down 11%, which is negative 52 because we have so many shares. This one actually might be a really good buy right now to be down 11%. I actually might consider buying this for this week because it's so cheap. And in fact, it might be a good idea when I do these little dividend investing updates to kind of maybe pick the stocks that are down the lowest, right? Or maybe like make it at the base of the focus so that we're buying them at the cheapest price. And then as they recover over time, we'll make the most money in the long run. Maybe I'll focus the bulk of the buying with some of those lower stocks, and then I still want to sprinkle it around to make sure we'll always invest into a little bit of everything. And then the last one we have here is ZWC. It's almost hard to say. Bank of Montreal Canadian High Dividend Covered Call ETF. This is like loans and I think like that with banks for Bank of Montreal. And we are up 3%. So this one's doing pretty good, pretty solid. And I think for this week, I'm actually going to pick XRE. I think that's what I'm going to invest in the most. And I'm going to be picking XRE. And I might pick one of these other ones that we don't have a lot of shares in. Let's see how many shares we have for Shaw. We have 8 shares, which is 7% of the portfolio, so it's a little bit high. Let's check out SIS with Silveria Corp. Actually, this might be a good buy right now. Like they're down 5%. We only have 3 shares, and it's a pretty cheaper price. So I think I'm going to be buying Silveria for this week, and we're going to be buying XRE since they're down the most in this portfolio, and I think they're pretty good buys. They're pretty solid companies, especially XRE. I think is going to recover eventually, and Silveria is a really good Corp is a really good stock that's just they're going to do well going into the future. They just kind of suffered a little bit from the recent dip that we've had. So that's the portfolio, guys. I hope you guys enjoyed that. I know it's a little bit longer than what I would normally do, but I know some of you guys are requesting that, so I just wanted to show that. Next up, let's take a peek at the dividends, which we're going to track, and I think we do have a bunch of new dividends because it was beginning of the month. It's beginning of June, so some of our other dividends are starting to pay off. I'm just going to filter the right account here into our tax-free savings account, which is our dividend account. We can see here over the past couple days, we did get a bunch of dividends. Towards the end of May, we got I'll just kind of show you guys some of the ones from May. So as you guys can see, like our dividends are starting to add up over time. You can see we have 80 cents from Shaw at the end of May, RNW 86 cents, XRE $1.77, PIF had a nice little dividend, $2. XHD another $1.09, Enbridge $1.62, ZWC 88 cents, and then VDY with a nice solid dividend at $2.35. They actually increased their dividend. So yeah, nice little dividend there. And if I bring up my investing sheet here, you guys can see all the dividends I've had up to date. I'll just zoom in here a little bit so you guys can see that better. You can see once again, these are all the different months we've kind of slowly grown over time. And in May we made $7.79. And then in June, beginning of June, we're already at almost $5. So as you guys can see, like it is slowly starting to grow, but it's starting to get there, slowly. And then we have $24.26 is what we made overall. And once again, if I bring up my portfolio, we'll go back here to the start. Our all-time value in this portfolio, we're down 3%, which is $80. So not too bad. The portfolio, once again, it's going up and down. We had a little bit of a green in the past week or two, but we're back down again. But once again, as long as we keep investing into it, it will grow, it will get better, and I have good faith in the portfolio. So that's pretty much it for this update, guys. I hope you guys enjoyed it. If you guys do want to see more dividend investing videos, you guys want to follow along with me on this journey, be sure to subscribe to the channel. And if you guys enjoyed this video, be sure to smash the like button. I would appreciate it very much. Thanks for watching, guys. I hope you guys enjoyed this video. Let me know what you guys think in the comments, and I'll see you guys later.